What's up, guys? It's Ron G from the Broad Street Trades, and I'm going to go over Fibonacci Extensions and Fibonacci Retracements, how to use them, and why I hate them. There's no intro here, so let's just jump into it. Yeet! Alright, so first off, I'm going to go into how to draw them before I get into why I hate them. So for Fibonacci Retracement, and the whole goal is to find the trend, right? And I know it's easier said than done. I know finding the trend is like the most logical thing to do when you're trying to trade. Trend is your friend. You don't want to be shorting in an uptrend. You don't be selling into a downtrend. Buying into a downtrend. So you want to go from a low to the high. All right, and what your goal here is to do is to find the trend, right? That's first off. Secondly, if it's an uptrend, you're like, oh, I don't know where to buy, right? And most of the time, you want to buy on the pullback, right? You don't want to buy into strength. You want to buy, kind into weakness, and then hopefully, that it go forward. So what this does is that it helps you buy the retracements. This is your 100% retracement, meaning that it pulls back 100% to where it was, and then 50% retracement. This is 50% from where it just was, and so forth and so forth. So what you want to do is you want to wait for it to pull back to one of these retracements, something like this, and then get in long. You don't want to buy the top and then it pulls back and you're down on this trade immediately. So think of these lines as support and resistance, because that's all they really are. Excuse me. All they really are is support and resistance on a chart, and you just want to buy the pullbacks here. If you were longing it, now if you were shorting it, you would do the opposite. You would get the top to a low. And how you would trade this is every time it rejected, it pulled down, it rejected, and it sold off. But obviously this way. We would be looking on the right side, but we're only going to see the left side here because we don't have the right side. So what you want to do is you want to see if it pulled back, right? If it broke through this low here, this 78.6, and rejected it, then you would want to take a short to the next spot down. Now the golden spots for the Fibonacci's are the 61.8 and the 38.2. These are the golden zones. These are the zones that everyone's looking for. These are the spots that everyone wants to go long or go short on. And then that also leads me into why I hate Fibonacci retracements. So the reason why I hate Fibonacci retracements and I think they're bad is because, one, where you might have drawn yours might not be where I drawn mine. I'm gonna show the example. You might think, oh, how can you mess that up? No, that's not true. You can definitely mess this up. So I drew it from here, right? This was my spot, right? Because this would have been the day I was trading, right? So let's say I was trading on Wednesday, and then when market was pulling back, I said, you know what? I already got my high, so I already got my low, and I already got my high. So let me draw one here and draw one here, right? And then once it broke out, you could have went long on it. Yeah, and that's true, and that's cute. That's fucking cute. But the reason why fibs are trash is because where I just drew mine at, look at this little zone I have to play off, right? Look at these little scalping weird spots. I would draw it, but you would draw it. You would have did this, You would have did this. And our zones look completely different. So fib in that respect, it sucks because it's not really price action, it's not really volume, it's not really even news, it's not really anything substantial that it should be moving, and it just becomes a self-fulfilling prophecy, meaning that everyone's watching this 61.8 level, right? Or everyone's watching this 38.2 level, right? So then what happens is price comes in those zones. And that's if you guys drew it the same way, and that's if you guys had it on the same time frame. And And then price becomes active at these spots because the 61.8, everyone, let's say if everyone had this Fibonacci drew the same way, they'd have been looking at it, everyone would have been buying it up because, oh, they said, oh man, Fibonacci's at 61.8, let me buy this up. And that's what retail traders do, is just follow these ways of trading, Fibonacci or even support and resistance trading, which I don't think is very suitable either. But they got in long here, and then boom, they got out. And then let's say hopefully they got out and they took profits here at this next spot. I mean, that was a couple points, not bad at all. But the reason why I hate, yet again, Fibonacci retracements is because there's no price action there. There's no real volume indicator there when they're at what is that, 61.8? There's no volume there. That's not a significant spot on the chart. That's not an actual resistance spot on the chart that you would plot, like, like a daily resistance or like something like that. There's no significance to those areas besides them just being psychological things that people just make themselves see. And I know I'm just shitting on Fibonacci here, but that's the main reason why I don't like them in trading. Now, Fibonacci itself, the number sequence seems very valuable in geometry and things that we use, but as far as trading, I feel like it's just a resource that retail use, that institutions put out so people can trade off them. I personally don't use Fibonacci. I do look at Fibonacci sometimes, and that's only to see what is retail traders are looking at. I am a retail trader, but I trade like an institution, as everybody should. That's first off. And secondly is I want to see where everybody's selling, where everyone's buying, so I know what I should be doing. Because if all the retail traders are thinking buy the 6180, I'm thinking sell. I'm thinking it's going to sell then, and vice versa. And trust me, we win pretty often with that. Now, what I do like is Fibonacci extensions. This is what I do like. So Thursday, this was my low, and at the time, this was my high. And so the reason why I like the Fibonacci extensions, if we can I'll fix this. I'm pretty sure this was it. Yeah, that was it. It probably was like more right here, but that's okay. That's okay. So the reason, and yet again, this is one of the problems with the Fibonacci extensions. Well, Fibonacci itself, not even just the extensions, but the extensions, you kind of can't fuck them up in a way, and I'll go over that in a second. So the Fibonacci extensions I like using, and what this is basically doing is showing price action above all-time highs. So all-time highs is very difficult to trade. I tell everyone that's in the Discord, I tell everyone that asks me about all-time highs, how to chart them. Anything above all-time highs is risky business because there could be, a huge sell order at any spot. Psychological numbers normally work. So for instance, this 4,020 was probably a significant number. As you can see, it used it as support. So it was hard resistance, and then it used it as support. Psychological numbers normally come into play after all-time highs breaks and Fibonacci extensions, and here's why. So you can chart it from your low to the high to the all-time high. Whenever most of the time price hits all-time highs like this, and then it retraces some, because there's some small selling pressure there because everyone gets scared. So you could chart it there, but the reason why the extensions work in all-time highs, in my opinion, is because it just normally just shows you where the price is going next. And yet again, it's also a self-fulfilling prophecy. So, for instance, if I'm drawing my line here, just like everyone else, to the all-time highs, most of the time everyone's going to have the next target on hand too. So when price breaks this 100% here, normally what happens is you'll see the next spot, this 161.80 spot, come next. I plotted plenty of stocks this way to be all-time highs. A lot of guys in Discord, we've done that. We did it with Disney, Boeing, Microsoft. We did it with a bunch of stocks. And this is weird how oddly enough this works, but yet again, it's a self-fulfilling prophecy. Everyone's looking at it. So it just becomes a thing that works because everyone's looking at it. Everyone thinks that, oh, once it gets here, then it's going to sell off. This is the next target. So then it becomes the next target. That's just how it works when it's a self-fulfilling prophecy like that. I think all the Fibonacci is just straight jargon, not the sequence itself, not the data, not the geometry itself, but I think in trading, the Fibonacci itself is just a bunch of jargon. It's non-existent, and everyone just looks at it and says that it has to be true. Kind of like RSI, even though I do use it, but I'm never paying attention to this when I'm taking trades. I just use it because I know everyone else is watching it. That's the only reason why I use it, is because I know everyone else is watching it. So I don't use MACD and all these other things, but I do take a look at the RSI because I know that I might not be watching because I know it doesn't matter, but I know another 150 traders, retail traders, are watching it. So it's going to react off that. Personally, I think price action works. As you can see here, this is supply zone that I had. Price sold off from it. This is pre-drawn. It's there. I don't do anything to it, but that's Fibonacci. That's how you would use them. That's why I gave the reasons why I don't like them. If anybody has any questions, you can join the Discord. We can keep the conversation going. You can email me at broadstreettrades@gmail.com. We can talk about it there if you like to. If there's anything that you guys feel like I left out when it came to Fibonacci's, feel free to ask. Till next time, guys, take care.